Let's bring in Mike Werner. He's a senior research analyst at Sanford Bernstein. Mike, ready to join us. Well, they're having to loosen up, aren't they? I mean, and the thing is, it's uncertain as far as the economy goes right now as to what is going to happen next.
Absolutely. We've seen the economy slow. The question is how much is it going to slow? And really, the slowdown in the economy is partly driven by the monetary tightening that we saw really up until the end of 2011. So the government does have some room to ease on monetary policy. We've seen 2 RRR cuts so far. And if things get worse, there is also the potential now that inflation has come down to cut interest rates as well. So there's still some tools that they can use.
Yeah, Mike, I just want to get your views on Adrian Mowat. He's a guest we have quite often from JP Morgan. He says if you are looking at the Chinese data at the moment, you should stop debating about a hard landing, saying China is in a hard landing right now. Now, what do you make of that?
Yeah, we don't see that yet in the data. If you take a look, growth is still up in the mid to high single digits year over year with the numbers that came out for January and February. So it's certainly decelerating, but we haven't seen a sharp deceleration, and it appears actually that some of this data is leveling off. So again, we do think it's going to be a soft landing. We're not in that hard landing yet.
But you've got to say here, Mike, I mean, they have so many tools at their disposal. I mean, they've got a lot of bullets left in the guns if they want to really invigorate the whole economy.
That's absolutely correct. I mean, what they don't want to do is they don't want to shoot those bullets too early. They don't want to have a repeat of what happened back in late 2008, early 2009. So they do want to see some more data come in, and you're absolutely right. They do have the tools. They could cut those RRRs. They can lower interest rates. Interest rates are quite high right now, and the fact that inflation has come down really gives them the opportunity to do that.
Now, loan growth, as far as the banks go this year, now that's proving to be a bit of a challenge. And I think your argument is it's not just the supply side, it's also the demand side here too.
That's absolutely correct. We really seen on the supply side with the small and medium-sized banks, deposit growth is slow, can't attract deposits, it's really difficult to extend loans. But for the larger banks, what we've seen during the first 2 months of this year is a real sharp slowdown in medium and long-term loans. These are loans that usually go to SOEs, property developers, LGFVs, and we've seen demand really shrink in that area of the market.
Okay, what does that mean in terms of shoring up the balance sheets here? I mean, do they come to the market? I think you wanted to make a comment about Bank of Communications.
Absolutely. I mean, for the Chinese banks, actually, it just means slower growth. And again, to be honest with you, the banks have been growing too fast the past couple of years, which is why these banks constantly have to return to the market to raise equity. So we don't actually look at slower growth as the worst thing for the banks. And to put that into respect with what's happening today, BOCOM is going to be holding a press conference later tonight, a conference call, to discuss a potential private placement. This is a bank that there's been reports out that they're going to have to go out and raise equity. They have the lowest capital ratio in the group, and it does look like they'll be making an announcement about a private placement later today.
Okay, is it really emblematic of what's going on generally with these banks? And are we going to see more of this?
I don't think we're going to see too much more of this. There's a couple of banks out there that still are stretched in terms of capital. But again, the fact that the banks are growing at a much slower pace means they don't need as much capital to support that balance sheet growth. And we expect that to continue as we go through 2012.
Well, I mean, they're evolving, aren't they, these lenders? They're doing more like, normal lenders in the West, I guess. So, what do you think they should be concentrating on in order to actually lift up that deposit ratio that you're talking about and have more money at their disposal?
Well, it's tough for them because the government sets those deposit interest rates, and they're not allowed to set those interest rates above that ceiling. So the banks can't use pricing. What they use instead is a number of different other tools, access to other services, better customer service. But really, for the banks to be able to attract these deposits, you're going to need to see some type of reform in the interest rate environment, and that's something that probably won't happen until maybe the start of it, till next year, and that's going to be a very long process, probably 5 to 7 years from the start to the finish.
Mike, thank you so much for that.
Thanks so much, Rishaad.
Mike Werner there from Sanford Bernstein.